Hey, how you doing?
Hello. Hi, everybody.
How are you doing?
Doing well. How are you?
Great. Yeah, I just got done doing a stream on how to mint an NFT and how to bring it onto like a, a marketplace like OpenSea.
I listened to the last minutes of it. It was very interesting because I'm also deeply involved in NFT market myself. And yeah, this was great.
Yeah, I mean, I think that's what I try to do is just try to, try to open up what it means, even though sometimes it may be difficult to describe, even for me to understand. It's I think it's important to demystify it.
Definitely.
All right, well, we'll hand the reins over to you, and I'm just going to go ahead and go behind the scenes now.
Hey, yeah, thanks a lot for having me.
I'm going to have
Okay, hi.
I'm going to have to grow out my hair to compete with Eric.
And with me then.
You too, yeah, that's right. Yeah.
How are you today, David?
I'm good. I'm good. Sorry for looking a little disheveled, but I was, I'm trying to. Anna asked me to do this, I think, just a couple of days ago, and I had a bunch of stuff on my schedule, and I wanted to make it into the gym. So it's, Saturday. So that's nice to see everybody. Nice to see you again, huh?
Nice to see you. Nice to be interviewing you again. And then it's just this time of the year, and you look great. So yeah, happy to jump on this interview and just discuss, because we have so many interesting things happening this year. And I think it's great to just wrap it up with you. I'm personally very excited about that. And I personally have a lot of questions. Yeah, so excited to be here.
Yeah. Where are you right now? Are you in New York or?
I'm currently in Vancouver. I've been based out of Vancouver this entire year.
Oh, it's pretty spot.
Yeah, no, it's a great spot. And Masha will be coming here as well. But I think that most of Blockchain Center viewers already know who you are. But just to give a brief introduction, you're the founder of Weild & Co. And you're also known for your position as a former vice chairman of NASDAQ. Anything you would like to add, like as a personal background, anything you would like to share with us?
Look, I mean, I think there's a reason why I get invited to speak is I've been working in investment banking in the securities industry for, my whole career. And I took 500 companies public, literally, from big ones like NVIDIA, which is, Jensen Huang's company, Celgene, that was sold to Bristol Myers Squibb for $74 billion. But I worked with them when they were a $100 million market value company. And so what I'm, and then people call me the father of the Jobs Act. And for those of you that don't know, the Jobs Act was, I wrote a series of papers on market structure that basically showed the drop off in the small IPO and inspired people in Congress to try and write solutions. And some of these solutions are things that, at least in the United States, people are making use of now to do, tokenized securities and other kinds of capital raising transactions. And so, when all the ICO stuff happened initially, and it was not going through the Securities and Exchange Commission, I was very early telling people, got to be careful, because this stuff, is going to be deemed to be illegal securities transactions. And sure enough, it was. I also told people when they were trading crypto and tokens that you got to be careful, because those are regulated businesses in the United States, and you can't call yourself an exchange because it's a defined term under the Securities and Exchange Act of 1934. And so, that was before the SEC chair even said it. And so I got a little bit of notoriety in the crypto circles for some of the comments that I made that turned out to have been right.
Yeah.
But where we have an investment banking practice that works in the blockchain space, we represent clients. We started an investment bank. It's actually in the cloud, a network investment bank that we started from basically scratch in August of 2016, and we're up to 100 professionals now, and growing. And I ran a top 10 investment bank years ago, and so what I'm trying to do is to essentially virtualize what we had in the in a big investment bank in the cloud in a high payout independent contractor model, because my belief is that investment bankers actually need to collaborate and that little investment banks don't work very well. So we want to get really, really, really large. So if you will, we're a form of decentralized finance, okay? But but we ourselves are not blockchain right now, although we represent blockchain clients, among other things.
Got it. And speaking of decentralized finance, basically what we're seeing now is, even this year, starting from Telegram to multiple other lawsuits, companies that were raising money via ICOs and just doing being very active in 2017, 2018, they are being sued just now. And I'm wondering if something that's going on with Uniswap or some DeFi projects, we will be seeing the same wave like 2 years from now. Will the same regulations be covering this entire space, or it's still, will they be able to avoid it? Because it still doesn't look, it's the same Wild West that we've been seeing this year. What do you think about that?
Well, I think that there are basic principles that guide the application of capital raising through the Securities and Exchange Commission, for example, that have been developed over many years. And then also you have, the FTC and, people disclosure and basically doing a very good job of detailing what goes on so that people can't feel that there's been material omissions of information. I mean, the problem with all the ICOs originally, and I was picking up the white papers and I would read them and I'd look at the description of the token and I couldn't understand what the real economic rights, what was I really getting, right? And then I couldn't really understand the plan. And so there's two possible conclusions. Either it's not very well done, or I'm not smart enough to understand what they're talking about, right? And I found over the years that as much as I start to think, God, I must, be getting old and I don't really understand what's going on, and that really the problem is that the thing's not very well written and it's not up to the standards that are required to do a fair and proper disclosure and description. And a lot of those businesses, some of them were well thought out, but some of them weren't particularly well thought out, but almost all of them were not particularly well drafted because they weren't using securities industry standards for their disclosure. I think that, I think that the SEC has been really pretty temperate, because they understand that there are a lot of investors and they don't want to create a lot of incremental harm in general, but they also want to make sure that people start to comply. And if they issue a security, or even if it's in the form of a token, but it essentially is going to be deemed to be a security because it has all the characteristics of that what you would see in the Howey test, for example, that they're going to assert jurisdiction, right? And even if they don't, the FBI or the states, we have 50 state regulators in the United States, and they can assert jurisdiction and say, what you did was fraudulent, right? And even though it may not have been your intent to defraud people, and I think that's probably very good, and it's very healthy for investors. What's not very good is the pace at which the United States government has moved, and it's not very good that NASDAQ and the New York Stock Exchange haven't figured out how to list a token yet. And it's not very good that the DTCC, the Central Clearing Authority for securities, hasn't figured out how to take a deposit of tokens and get them reflected on your brokerage account at E-Trade or Ameritrade or Morgan Stanley. And that's slowing the capital raising and the transition, if you will, to tokens. It's slowing it down because, just for people to understand, if I in the United States, if I want to avoid in the aftermarket state by state regulation, and I want to get the brokerage accounts to the big brokerage firms to allow their brokers to solicit a trade or an investment in your company, you need to have the stock or the token listed on what they call a national securities exchange. The two big ones being NASDAQ or the New York Stock Exchange, because they provide you with an exemption from state registration.
Yeah.
So you can win the exemption from state registration by filing with the SEC and doing a full-blown S1. But then in the aftermarket, once the tokens start trading, there's no longer a state-by-state exemption if you're in the over-the-counter market. You need the national exchange listing to do that. And so until they figure out how to do that, it makes it harder to kind of, go to the next phase of, if you will, the development of particularly the token as securities markets.
I have a couple of questions here. One, there is a new proposed rule by FinCEN that would require all virtual asset service providers essentially to keep records of all the transactions. And I think it was like midnight rule because no one expected that. Is it something that will help or no?
This is the KYC proposal, the Know Your Customer proposal, right? And look, I've said to people, way back at the beginning, this is for years now, that governments, who have a vested interest in thwarting terrorism and money laundering and collecting taxes are going to figure out how to assert jurisdiction and to be able to trace all of this stuff, right? So just because you could do peer-to-peer with a cyber wallet doesn't mean that at some point the government's not going to say, hey, we're going to make that illegal now. We're going to require you on the cyber wallet side to know who that cyber wallet is being held by, to know your customer, because we don't want evildoers transacting on a peer-to-peer basis, financing terrorism or laundering drug money and things like that. And I think that this is just kind of natural. I think the governments have been ridiculously slow at doing it. I think they've done a better job of monitoring some of this activity because, I was going to say in 2018 at the end of, so exactly 2 years ago, I was over in the House of Representatives when they were going through the transition between the Republicans and the Democrats. And I think I was talking to people in the House Oversight Committee or something, and they were telling me about, all the national security and how they'd been tracking and detecting massive transfers of Bitcoin from place to place and had a pretty fair idea of who was doing it, despite the fact that they thought that, these people thought that they were going undetected. So I think that that maybe the governments or maybe a little bit, and their intelligence agents a bit more than it, but you expect that going somehow a way to track for tax purposes, right? I mean, that's going to be a real focus. They're going to have to know where the money or the crypto came from because they want to thwart terrorism and they want to thwart money laundering, criminal activity. And so it could be just as simple as, we come out and the government say it's illegal to own a crypto warrant that does a wallet that doesn't send an audit trail to a central repository so that we can track your activity, right? And then if you get caught with one, you're liable, right? So even though they can't, they may not be able to detect that you have that cyber wallet, they could pass a law that says, tough noogies, if you have a cyber wallet, you better make sure that it's compliant, right? And I think that you'll start to see people do some things like that. But to answer your question, with the Financial Crimes Enforcement Agency of the U.S. Treasury, FinCEN, they are looking at making sure that, under the Know Your Customer rule, that they know who has these cyber wallets because they don't want these cyber wallets to be held by criminals.
Makes sense. And also to the point that you mentioned earlier, I think in blockchain community in general, you're known as the person who's advocating for tokenized securities. And I think it was a very interesting event hosted by Securrency. and now former chairman of SEC, Jay Clayton, said that he believes that all securities eventually will be tokenized. And so despite that government is moving quite slow, there's still a sentiment towards that on the market in general, like including yourself, some other thought leaders in this space. But do you think this is still the future, and when we will see the transition towards that, the real transition?
Yeah, I mean, I think that, well, whether everything will be ultimately tokenized remains to be seen, right? But I think that you're going to see very large swaths of the market become tokenized. There's no question about it. But particularly, you go to conferences and there's a lot of people saying a lot of really stupid things, right? I mean, and I'm going to get a little, antagonistic here, but like one of my pet peeves is everybody talking about how you tokenize something and it creates liquidity. It's actually a pet peeve of FINRA, right? Because what they overpromise liquidity. We tokenize something. What is liquidity? Liquidity is I can move size, volume within a narrow price tolerance, and the token or the security is supported. Well, guess what? Just because you tokenize something that would have traded poorly as a stock doesn't mean it's going to trade better as a token. Right? Now, I mean, it's like, it drives me crazy because you get young people on panels, talking about we're going to create liquidity. Well, but what you can do through the smart contract is you can get rid of a lot of the legal stuff and automate the compliance checks, right? Because a token will integrate into that software layer, and so it's the magic of the software essentially that can take a lot of cost out of the equation and make it easier to move something from point A to point B. So in that sense, it may improve or make it more liquid, but it's not going to trade like Apple stock does on the NASDAQ stock market, right? Not that kind of liquidity, not like U.S. Treasuries, not like the currency markets. So, but there are things that tokens, because you're dealing with bits and bytes, can do much better than traditional securities. They are very efficient, low cost to pay dividends, right? Or coupons, distributions, because it's just bits and bytes going into your wallet, right? So it's frictionless. So I could essentially go and pay a distribution, a micro distribution every second of every day if I wanted to, in the most extreme case. You could never do that with a dividend, with a dividend paying stock. You pay it 4 times a year, or maybe a dividend closed-end bond fund. You pay it every month. Why is that significant, right? It's significant because individuals live on a weekly, bi-weekly, monthly basis. They pay their bills, right? So frequency of distributions and lowering the cost of making those distributions actually adds value. And interestingly, if you do studies, which I've done, because remember I ran an equity capital markets group, and I did all sorts of closed-end bond funds and closed-end equity funds and real estate investment trust, you name it, and we watched what traded and why it traded well. Things with higher distributions and greater frequency of distribution tend to trade better than things with lower distributions and lower frequency of distribution, because the market votes with their wallet, their pocketbook, and they're saying we value the higher frequency payers more than we value the lower frequency payers, even if the distribution is the same amount. The institutions, will think that retail interest that bids up, they'd probably rather pay for sometimes the lower frequency distribution, because they trade at a better all-in yield, all-in return basis. But for issuers, it adds a lot of value because it causes that security to trade at a higher price than it otherwise would have traded. If that makes sense to you.
Yeah, this makes sense. And one more.
I'm a total capital markets nerd.
But this is great, and I also want to ask you one question from the perspective of your experience as an investment banker. like you said, that you took 500 companies public,
Yeah.
and one thing less.
And
Yeah.
what?
So one thing that the blockchain space has also been buzzing about is Coinbase IPO,
Yeah.
which would be the first, I think, blockchain company IPO, essentially first cryptocurrency exchange IPO, which I think they are working together on with Goldman Sachs. What do you think we should expect with that? Are they just the first starting the trend, or does it have chances to be successful? Or your thoughts on this topic?
Well, yeah, no, look, I think it's a real business, right? And I think that you know, they've driven real revenue. I think the question is, how will they? And I don't know the answer to this. How are they going to do their deal? Because I will tell you, the first blockchain IPO, if you will, for an operating company was actually for INX. It's an Israeli company run by the I'm on the board of directors there. Okay, but what we did, and this is why I know this so well, we went through the SEC for 2.5 years because Shai wanted to issue a token as a security, right? And that was where I was telling you, we couldn't get it listed on NASDAQ or the New York because they didn't know what to do with it. DTCC, we talked to the head of technology over there, we couldn't get them to take a deposit of tokens so that they would show up then on securities accounts, right, electronically. Yeah. So I think that, Coinbase, it'll be interesting. Are they going to issue traditional securities to finance themselves, or will they issue a token as a security? And my guess is that, they might find it easier just to issue a traditional security and get it into the full-blown system, because, and my guess is that's what Goldman will advise them ultimately to do, because it'll create broader adoption, right? I mean, I've told Securitize over the years, and Polymath and others that are looking at platforms, to create platforms to tokenize things, that, I think you have to think about, what investors want, right?
Yeah.
And not all investors want a token now, right? So, if I'm advising an issuer, I say, figure out how to issue it. It's both a token or a traditional security, right? And you can maximize your market, but don't tell somebody that, who has an interest in the fundamentals of your business and you're trying to raise capital, that you can't accommodate the way that they want to have exposure to you. I mean, we think that this is such a novel thing, and the new thing, tokens and, crypto and so on and so forth. But, remember, we started with just physical stock certificates, and then we went to electronic delivery in the United States. That was a form of settlement. Tokens is a different form of settlement, right? It was another electronic form. Tokens are not that novel. I mean, we've been using tokens or hashes for years as keys to open up, to access and download software, for example, right? So, what's different about it is that we're now trading those tokens, right? And we're also integrating them into software layers. And the blockchain, the distributed ledger, is just really a scorekeeping system, right? So there's a novel combination of three things that really existed before we started trading Bitcoin, right? So, as I like to say to folks, very little is revolutionary. This is sort of an evolutionary thing that somebody put together some things, connected a bunch of dots and created a system that was very novel. But it's evolutionary and not really revolutionary.
Yeah. And since you mentioned Bitcoin, I can't help asking, the current rally, it's something unprecedented. What are your thoughts? So why is it happening? What we should expect, not from even the investment perspective, but for digital assets in general?
Well, first of all, in institutional terms, Bitcoin is very tiny. But I think people genuinely want to get exposure. And so what you have is a supply and demand imbalance where more people are coming into the market, and there's, and institutions, are smaller institutions mostly, are starting to come into the market. And so as you make capital, if you will, if you permission it to start to be able to invest in crypto, and it was sitting on the sidelines, that it's going to just drive up the value of those crypto assets. And so, you know, I don't think that this is any different than what we experienced during the dot-com bubble, which I don't know how old you were during the dot-com bubbles, but I used to sit on the commitment committee at Prudential Securities, you know, and listen to, because we had all this retail involvement, just like we do with with crypto, retail involvement that was driving the value of internet stocks, of dot-com stocks. And the institutions were looking at this stuff and saying the valuations don't make any sense. The valuations don't make any sense. But then they were looking for alpha, you know, uncorrelated returns. And they finally you know, jumped into the market and started buying these dot-com stocks because they were driving the indexes up and they were being left behind. Well, it's a little bit different, but not that much different. The market primarily started with individual investors, right? And now you're starting to see institutions come into it. The one difference, and this is why there's a little bit more friction for the institutional community, is they're still getting comfortable with the custody issues and you know, the risk that you'll lose all that Bitcoin if you keep it on your computer or in your cyber wallet or something. And so, you know, the custody issues custody solutions are starting to develop. You know, you see Fidelity with their digital assets initiative, and you know, looking at how to effectively, you know, custody you know, tokens. And I think as people, you know, as big brand name, and I'm not even saying Coinbase, because Coinbase is not, you know, if you're a big institution, the fiduciary, that you know, the party that you're going to trust is a State Street, it's a Fidelity, it's these very highly established names. And if they say they can do it for you, you're apt to do it. Coinbase is still a new entrant, right? And the institutional trust is not there yet. So it remains to be seen, you know, if many risk-averse institutions that are thinking about getting into crypto will actually try and custody with somebody like a Coinbase, right? I mean, but I think a lot of, you know, there's so much money. I mean, just in the institutional equity space, there's $40 trillion, right?
Yeah.
And if just a small portion of that comes into, you know, Bitcoin, it could drive the price up, you know, pretty significantly. So that's what I think you're seeing. I think you're seeing, you know, new assets that heretofore haven't been playing in crypto, moving into crypto gradually. It's the adoption curve that we're going through. And I think that there'll be hiccups and ups and downs, but I think they'll be steadily, and really not about to have some exposure in a well-diversified portfolio. I'm actually, over the long run, you know, for the next couple of years at least, fairly bullish on Bitcoin.
And I've been hearing, like, in general, I've been seeing a lot more materials explaining to either asset managers or institutional investors what is the appropriate way, like how they can get this risk managed exposure. Like, so don't invest more than 5%, but there is some practical advice. And I think since we're seeing a lot more of it, it's definitely also can be a sign of that people are interested and they will be entering this space more and more. And it's pretty exciting to see, like, both from the perspective of like a retail investor and as I'm very interested in this industry in general.
Yeah, I think that's exactly right. I mean, we have you know, people that were very traditional research kinds of houses that you know, have you know, there's one fellow I know that used to be the one of the senior strategy people at Morgan Stanley, and set up a research boutique, and they do traditional you know, asset allocation and macro research, but they've started they've started doing research in crypto and block now, because many of their family office and other clients, have an interest in learning about it. So, this is, if you will, the legitimization, for want of a better word, of this sector. And I think that, as time goes on, you're going to see more and more of the traditional kinds of firms, gradually step in, and then ultimately everybody will be participating in it. I mean, all the traditional Wall Street firms.
Got it. And we are into already our second half of our interview today, and now I'd like to transition more to broader, like, macroeconomical topics, so to say, because this year, like, not to go into politics too deep, but what we've been seeing with the U.S. election, and in general, like, everything that happened with the coronavirus pandemic. How do you see, like, and some people believe the election was compromised, for example. How do you see the current political situation? And you're in the US, you're seeing this from inside. How is it influencing the economy in general? And what is the impact it might have on digital assets?
Well, those are good questions. I think a lot of it, a lot hinges on the Georgia Senate seat races, as to who controls the U.S. Senate, because right now the Democrats control the executive branch with President-elect Biden, or they will, and then the U.S. House of Representatives. And so, if they control all three, then obviously they're going to be able to get a lot of legislation done. And I think that you'll see a very active couple of years, because I think that they'll want to get a lot done while they have control over three branches of government. If they don't, then there'll have to be a lot more compromise. You'll see a lot less done because the Republicans under Mitch McConnell will have a block. I think the one thing I would say to folks is that the chairman of the co-head of the Biden transition team was one of the first advocates for an improved IPO market. It was Senator Ted Kaufman, who gave a speech on the floor of the U.S. Senate. He's a Democrat. The concluding line was something to the effect that if we can figure out how to get the $25 million IPO to work again, both on the offering and in the aftermarket, we will get America back to business. And I think that a lot of the pro-capital formation legislation that had been done, was incredibly bipartisan. I was active on a bill that was ultimately, to create a new form of stock exchange called a venture exchange with Congressman Emmer in 2018, and then it got rolled into another omnibus bill that people referred to as Jobs Act 3.0, called the Jobs and Investor Confidence Act of 2018, and it had the support of the Trump White House, and but it essentially got stopped only because President Trump shut down the U.S. government, and it pushed the legislation into the next Congress, which has the effect of mooting it, right? And then the Democrats took over, and then we went into the election. So I think we'll continue to move forward in the United States. I think that the climate has been open to improving capital formation steadily. I don't think that that's unique to the Republicans or to the Democrats, for that matter. So I'm cautiously optimistic that we'll have an opportunity to do some things that help entrepreneurs in general, and drive more, ultimately drive more startups, more exits, and the like. I think that there's general recognition that that blockchain and crypto is here to stay. Whether or not it's going to move any quicker in the United States, I don't know with the regulators. But I also think that, look, there was not there was high integrity to the U.S. election. I think that I don't think, I mean, you saw Krebs, who was the one that finally got fired. He was a lifelong Republican, but he was in charge for Homeland Security with cybersecurity for the election, and he himself on 60 Minutes said that it was the highest integrity election probably in the history of the United States. And you saw that President Trump's group basically lost, from what I can see, just about every challenge that they made over 50 cases for lack of evidence. I think that the shame of it all is that we I hate seeing people not come together to work together to improve the country. I think that the adversarial nature that politics have taken in the United States is kind of counterproductive. And I personally pine away for the days of Ronald Reagan and Tip O'Neill, when Tip was the Speaker of the House, and Reagan was obviously U.S. president. The two of them used to go out and get a beer together all the time. And it wasn't that they didn't have differences of opinion, but they worked it out, I think, because they both had an unabiding, sort of sense of patriotism and obligation to all of the American people. And the thing that I like about President-elect Biden is because I think he's striking the right tone, which is he wants to be a president for all of America. I think that's admirable, and I hope that the Republicans will participate, and they're going to have a lot of disagreements, but we really need to get some things done and put the American people first. I've got a lot of work to do, and I'm cautiously optimistic that we'll see more of that sort of better behavior with over the next couple of years. We'll see.
And one more COVID-related question. There were people who were advocating that basically not necessarily Bitcoin, but any type of some digital assets can be a great use case, basically distribution of some relief funds when these were these checks that people had to get to people who were basically left without the jobs, and it's like millions and millions of people. And there was essentially no convenient and fast way to do that. Do you think this is something like, okay, we see that there is a potential application, or maybe there is some other things like technology-wise that like COVID exposed to us?
Yeah, no, I think you could create a blockchain system that was incredibly fair, but first you'd have to make sure that everybody was on the block, that everybody had a cyber wallet, right? Everybody had a connection to be able to receive that way. It would be a great way of keeping track if you had people integrated, so that you could look at when people people passed away and the like, then you could shut off, you could automate the shutting off or integrate that information and shut off distributions to people that were no longer with us. So there might, there's a case to be made that, that if you completely systematized it, it would be a harder system to game. And you obviously could make the distributions kind of instantaneous. So, there's a lot to be said for it, but that's a very large system. And it depends probably on information that is kept by 50 different states that's not consistent. So I wouldn't underestimate the amount of work that it would take to do something like that. But theoretically, it could be a much more efficient, much higher integrity system, and it would be an interesting application of the technology.
And maybe I have a couple questions before we wrap up today, going more into like what will happen next year type of questions. Could you share some projects that you're personally excited about in this space?
Well, I mean, we're working with a company that is is doing something really interesting to value on the block illiquid assets, and it's really an information business to value commercial and other real estate, private equity, and to go from what is an annual valuation to one which is more continuous, at least 12 times a year. Crash the cost of those valuations. The significance of that is that it actually makes full-blown properties easier to transact. If somebody wants to buy and sell a building, you've got a valuation you can look at. But it also has an implication to essentially liberate capital for insurance companies. It could go from a tier 3 to a tier 2 asset. That has profound implications to then custody of these illiquid assets and making them ready to trade. And it's not really kind of tokenization. It's selling people little individual interests in commercial office properties, but rather for the institutional market to enable it to be more efficient. And so there are some really large institutions that are interested and that deal with custody and the like, that are very interested in this particular company and their approach to things. Now, they are aggregating the information and giving an audit trail on the sources of the information, so that then when it's supplied to the entities that actually do the valuations, that you've streamlined the process and there's high integrity to the data inputs, and so that people can have trust in those valuations. And I think that is potentially transformative and may ultimately ripple through the entire sort of, if you will, private equity, commercial office property markets and things. And it's a baseline, and from there, once you have those valuations, you could imagine more efficient trading of securities, lower cost trading and transacting, buying and selling of companies, buying and selling of properties. So that's one.
Mm-hmm. Thank you. And probably my final question for today, something that you're looking forward to in 2021, some high-level trends that you would advise people to look into, like what is happening on the macro level?
Well, look, we do have that that concern. I mean, Bitcoin's sort of tailor-made for inflation hedge, except for the problem is it doesn't service an inflation hedge, because really what's driving the value of Bitcoin right now is just a supply-demand imbalance, where you've got more demand than supply. Again, I think that macro institution beginning to move into crypto is something that there's going to be a lot of volatility. It'll be up and down. People get in and overpay, and it's going to be hard to watch. And it's not for the faint of heart. But I would say that the overarching macro trend is more money coming into the space, and an inflation, for want of a better term, in the value or an escalation in the value of some of these crypto assets. I still think it's going to be a while before tokens of securities, become widespread. Why? Because you have to deal with, it's a highly regulated business. I do think that you'll see more derivatives being formed around crypto as well. I mean, exchange traded funds is a form of derivatives and things. And so, like Grayscale, I think that there's a, appetite and more appetite for, people who want exposure to crypto to turn it into, a security form of ownership, so that they can just deal with the traditional custody issues, right? I want to custody an exchange traded fund. I don't want to touch the crypto, so this is the way I get my exposure. And so, crypto first, derivatives of crypto second, and then tokens as securities, kind of the caboose, because it just requires so many more checks and balances on the forms of regulators, stock exchanges, and the like. But I think that, I would watch for when NASDAQ, or the New York Stock Exchange announces that it will list a token as a security. When that happens, that's a shot across the bow of more rapid adoption. I would look for when DTCC says we can custody a token, and have it show up on in your E-Trade account, and because that is when you essentially enable the entire market to have exposure. I mean, people that don't want to touch a cyber wallet, but would rather own it would just as soon own a token or crypto through their traditional securities account. Then you all of a sudden take all that money that's sitting on the sideline and you make it now available. And so those are key sort of check the box things that I think we should look for. And if any of those things start to happen, it's going to cause a lot of buzz in the blockchain space.
Mm-hmm. Thank you, David. I think these are all my questions for today. Obviously, I always want to get in depth into more specific topics. But yeah, it's great to have this event, and thanks to Blockchain Center for organizing this, by the way, because it's a great way to wrap up the year, I think. Yeah, it was great having you. Pleasure talking to you.
Yeah, and happy belated Hanukkah. I know it was the 8th night of Hanukkah, and then and Merry Christmas to everybody. I hope you have a great and a blessed holiday season.
Mm-hmm. Thank you. And I think, Justin, I'm staying on the line for the next interview with Alex Salnikov from Rarible.
Yeah, hi. So yeah, you're in the next group as well for those. Thank you very much, David, for being on.
Yeah, my pleasure. My pleasure.
And oh, sorry, this is the next one coming up here. So just be a few minutes, I believe, for them to join for this one here.
Mm-hmm.
Sorry about that, one moment. Yeah, so I know you've done a few NFT panels with them in the past on the Blockchain Center's channel. We did a 3-part series. You hosted that one as well. So excited definitely to hear this next one with Alexander and James. I know we did an NFT one with Eric before. You had your discussion with David, and he was going in the process with OpenSea. And I know that a lot of these NFT companies seem to be working together with their marketplaces, and it's nice that there's a lot of integrations with everyone as well. I think you're muted. Sorry.
Yeah, that's right. And it was great to collaborate on this series with Blockchain Center. And I'm personally very excited to be working with Rarible as well. And James Waugh, he is a very active and well-known community member in not only in Rarible, but in NFT space in general. And I think it's interesting because me and my twin sister Masha, we still have a podcast about tokenized securities, and we were discussing this topic. And David, for example, was on our podcast last year, and we were diving deep in some of these questions earlier. But this is the first year when we are, as an industry in general, discussing NFTs in such depth, because this is essentially a very novel thing, and I think we'll be seeing a very drastic growth of this market. So yeah, it's interesting to chat and see also like what are, and obviously like Alex and Rarible, they are one of the leaders on their market, not only in terms of the volume, but in terms of recognition and trust, both from the artists, from the collectors, the community in general. So yeah, I'm excited to see what are their thoughts on the market, on the future, what we'll be seeing in 2021. So yeah, and we'll discuss that in a couple minutes, I guess.
A few minutes here for them as well. We have a lot of other great talks coming up. Also, I know you also we have Avagachi at 8 p.m. That's going to close us out for today also. And we have let's see what else. 4 p.m. we have a discussion for blockchain activism with Brittany Kaiser and Trent Poole. And then 5 o'clock, Brock Pierce is going on, and he is with guest Chris Rice. And then we have Harumi with Hirata Thompson with Celsius Network, and then Nick Gans with the Interpol, and then the Avagachi again with Daniel to close us out. So that's for the rest of the stream tonight. And then tomorrow we go into some of the judging for the hackathon, as well as a few additional panels and discussions. I believe there's one more workshop for dApp Starter Kit, DeFi, and then in-browser mining that we have for Sunday. And then the final judging as well. It looks like if you go to our Discord channel for the Blockchain Center, you'll see we do have some people discussing some of the different projects and sharing them as well. This is online event currently due to the circumstances. So most of the people are in the Hack the Holidays channel for the Blockchain Center, showing their different projects they're working on remotely. There's someone's making a hardware wallet that they're 3D printing. Looks like a few other products as well. So I'm really interested in see what comes out of this by the end of this week also. And then I think just a few more moments for the rest of Rarible to join. Kind of excited to get. I need to make an NFT. I haven't done it yet. So that's when I said I wasn't really too familiar. I just need to. I think I need to actually go through the process myself and buy one, make one. So far, I've only really done some of the DeFi things, all the different, as they say, fruits and vegetables down the grocery aisle. So it would be nice to change it up with a little bit of art that people are creating. There's a lot of really interesting art projects in there.
It's very interesting to see some very loud names. For example, from the recent announcements from Rarible, Sean Lennon just created one of his first NFTs and sold it on Rarible as well. And it's just one of the cases. And now they're both actors who are also painters and just public personalities who are looking more and more into this market. And it's great to see this getting out there. And I think one of the topics I would also like to discuss with the guys today is are the challenges of actually getting the attention of non-crypto, not crypto native audience to NFT, because this is basically, I think this is what a lot of challenges of crypto industry come in general. How do you explain how this works? How do you get them to get the wallet? How do you get them to transact properly?
Yeah,
so
the whole process of onboarding.
So yeah, excited to discuss that as well.
So yeah, that'd be interesting. I mean, I think the most common people here is the CryptoKitties, and that's the easiest reference point for right now, just because it was the most popular at the time. But that's I think we've moved a lot further past that now. So where there is actual art being created specifically on these marketplaces, and then having auctions, and there's videos, animations, GIFs. They have there's games. There's all these kinds of additional assets that have come out over the past few years. I know there's also some like not safe for work type content as well that's been coming up, which is another way of approaching it also, which it kind of covers, it seems like, all the bases for this. And then we are seeing a lot more news about like more famous artists being involved in these, which I think also helps with mainstream adoption. So I'm sure you'll talk about that a lot more coming up with the next segment.
Definitely, yeah. Personally, very excited about this market.
Yeah, it's nice to have you as a host for some of these discussions, especially the Blockchain Center ones previously, as well as today for David, and then the upcoming one also. So
it's my pleasure.
And then let's see what else we have on the schedule. Give me one moment. Sorry, I have like basically with the live production, since I'm doing that, and then this also is I have people like in my ear as well. So it gets a little crosstalk, and it gets a little interesting, just kind of switching gears between everything.
As you transfer it around in terms of the magnets.
Yep. So looks like we'll just give it another few moments for them to join the discussion. Just checked in with my team, so it is definitely interesting doing this all remotely 100%. We're not in like the same room together or anything like that, so everyone's in their respective houses as well, so it kind of changes I think the day of production and things like that have gone into this, where we're kind of on a separate call all day long, and then talking back and forth via text message and things like that, versus having a stage set up and all being in the same room together.
No, very excited for the blockchain, like, and not only for events in general to come back, because there's definitely like so many things, and something that like the tech space hasn't offered us yet is the way to basically network with people backstage. Because yes, I think in terms of the panels, in terms of the content that we're getting, it's almost just as good. It can be just as good, but there's nothing that replaces the this interaction behind the scenes backstage yet. So basically, yeah, I'm very excited for it to come back to us.